Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, October the 17th. My name is Eric Wilkinson and you might recognize me from mainstream media as the Wolfman. What I do is I teach people how to build option strategies, but more importantly, I also teach them how to implement those option strategies in the right environment with the right strike location and everything else in and around that. Right now, our course is talking about if you come up with a directional bias in something, XYZ stock, you're bullish or bearish, depending. We basically start from that assumption and then find the right strategy for that assumption. Most people don't do that. They'll tell you in hindsight what you should have done. I talk about everything like in these daily market commentaries. I go through the ups and downs of trading and how it really works out. I'm not going to cherry pick anything. We are going to talk about my trades as I'm doing those and then talk about how I get out of those trades as well. Anyway, without further ado, let's get on to talking about the economic picture here with some data across the pond. We got retail sales coming in at unchanged. Was expected it be actually a negative 0.1%. That is good. We want to see those retail sales doing better, especially over across the pond, as we've seen a lot of their economic data come in a little bit iffy and maybe even showing recessionary aspects. Also note that last month's number was revised slightly down from negative 0.2% to negative 0.3%. And then basically we're going to move back over here to the United States and talk about Philly Fed manufacturing. It's an index around the manufacturing sector of the greater Philadelphia area, and it came in at 5.6%, expected to be 7.3%. So that came off a little bit. That's not really a great sign there, but it is still doing decent, I would say. Building permits in the United States came in at 1.39 million permits pulled. Now we talk about this all the time. Pulling a permit doesn't necessarily mean you build on them, but housing starts came in at 1.26 million, slightly lower than the 1.36 million. Last month's number was revised up by about 30,000 housing starts ramped up. That's not a great revision, but a revision higher nonetheless. And then unemployment claims coming in line with expectations at 214,000. Industrial production out of the United States pulled back a little bit, came in at negative 0.4%. It was expected to be a negative 0.1%. They did revise last month's number up by 0.2%. Didn't make up for the headline miss necessarily, and most people probably aren't even going to talk about that one in the background there. Capacity utilization in line with expectations at 77.5%. And then we got natural gas storages at 104 billion cubic feet, which is slightly higher than the 100 billion cubic feet. Also, crude oil inventories, bang, came in at a build of 9.3%, expected to be 2.7%. Also, a couple Fed governors speaking, actually, Broman and Evans are going to be talking. Probably not a whole lot about the what the Fed is expected to do, because I believe they're inside of that window of 2 weeks in front of the meeting coming out on the 30th. So I don't think that they are really allowed to talk about what the Fed is predicting on those interest rates. All right, let's talk about the markets. We've got crude oil coming off just a little bit. I would expect it to come off a little bit more than that with that massive build, but we are still staying in line with where we've been talking about in the past, where we have been seeing this market stay within $55 to $50 a barrel, and I don't really foresee that breaking out of that. Maybe come up. It might test the value area here, where the point of control is really what it's called. That's the value area. The value area high might not get tested with those kind of builds. Value area low very well could be. This is the value area low, and that is where we're talking about staying between 50 and 55-ish area and filling in the volume around here, which is really what we're starting to see happen. I've been talking about that for a while, build out a bigger bell curve here, maybe even move that point of control down a little bit. That's going to take a little bit more time to work that kind of move out. We would have to really see that fill in that probably right around the $54 pricing area before we see that shift happen. All right, and then let's talk about gold futures. They are starting to move higher. They were testing the 1500 mark, just slightly below that right now. It looks like we might breach that. One thing to note, we are right below that 9-day moving average. That's going to act as resistance. But I do expect that gold should start moving higher as this quantitative easing starts really coming in and filtering in. It's supposed to start up here relatively soon. So that should start weakening the dollar, causing something like a safe haven in gold to start moving higher as well. We would expect futures, as it is forward looking, to start pricing that in a little bit sooner, but it's been struggling as of lately. All right, yesterday we were talking about this 160 handle in the bonds. I believe that's a really significant number there. That's really showing that the Fed is kind of on their mandate of keeping interest rates in check, and with the global economy slowing down, their mandate now isn't just here in the United States, it's really a global picture. So I think that we're going to hold on to that 160 handle, especially with today having a very mixed bag in the equities. You can see VIX really trying to figure out what direction it wants to go. It's up a little bit today, but that's because, like I said, we have a mixed bag across the board in equities. Right now, the Dow Jones is in positive territory, albeit only a couple of ticks there. Still holding on to the 2,700 there. We were seeing that in negative territory, while the equities in the NASDAQ and the E-mini S&Ps were in positive territory. Now we see the Dow in positive territory, the NASDAQ in slightly negative territory. One thing to note is I was looking at this chart pattern yesterday. We've got a nice bullish pattern going there. And then yesterday, that doji should probably be a little bit higher, that one from yesterday, to really make it look like a topping pattern. But today's counter-opposing doji is really making that look like we are going to be in a continuation pattern here to the upside. I probably should put that in green. It looks like we're going to move higher, because anytime you get those dojis where you get a topping pattern right there, and then another doji that looks like that, that is usually a continuation pattern, not necessarily a bearish pattern. All right, so I still believe the market is more bullish than bearish right now, especially with the easy money coming around the corner with the Fed interest rates and everything else around that. One thing to note, though, we are, like I said, when we start testing these value area highs, which is right here, we got a value area high, these two lines, one's for the time, one's for the volume. That is going to put a little bit more of downward pressure on that market, because it's just getting overextended to the upside, and probably rightfully so in the environment we're seeing, where the economic data isn't terrible, but it isn't robust by any stretch of the imagination. And moving over to the E-mini S&Ps, you can see here they're up in positive territory as well. Again, continuation pattern here with these dojis, making me believe that the market is has upward pressure to it, more upward pressure than negative pressure at this point. So the only thing we have to look at here is really these value area high, which will act as resistance the more we push in and above. Especially once you push above those, you start seeing more pressure as selling pressure as people start to cover trades there. All right, E-mini S&Ps, you can see overnight was relatively bullish. Yesterday, just look at that tight market inside day. Today breaking out above that, and as soon as the day session opened, we flushed most of those longs out, and right now looking like we found a bit of a bottom. You can see this, if we blow up that doji there, it looks like it is finding a bottom there. Any settlement above that is going to be rather bullish and maybe go and test that 3,000 again, just breaking below that as of right now. All right, enough about all that stuff. Let's talk about more fun things that, like our trades. If this GDX continues to rally, which I expect, GDXJ is the junior gold miners, that is going to be reflective of what happens in gold. We're seeing that push higher in gold, as we talked about there earlier. And this is something that I've had on for a while, and that's those NOV 34 puts that I originally sold for 65 cents. Right now it's trading right around 30, 32 actually, it looks like. That is 50% of my max profit, right? That's, where I normally want to get out. Right now I'm squeezing that out for 25 cents. I've got a working bid to buy back at 25 cents, so just slightly over a nickel away from that. I believe the low in there was 29 cents. So I just was working it out, thinking that we're going to continue higher. A lot of times when we see this push higher in gold, we actually see volatility expand in the precious metals. So that is slightly hurting me as I get my directional assumption right here. So probably look to cover that by the end of the day because it is at my profit target. All right, a couple of earnings trades that I did. Honeywell, and with Honeywell, I went in and did the October, which expires tomorrow, and sold the October 155 puts in there for 47 cents. I was able to buy those back for 7 cents this morning. Obviously got the direction right, and you can see volatility really got sucked out. Right back to the point of control. No sense in leaving that trade on for 7 cents and have a move away from where I am. So I got out of those, like I talk about, 4 earnings trades. Get out early, and unless it's a loser like we had here in IBM, and IBM started out not looking too good. I didn't think we were going to break below this Fibonacci right here. I talked about that yesterday, and that lines up with the 38 fib as well. You can see overnight we really bounced away from that, and then as soon as the second market opened, we have that initial market right after the close. Overnight really was pretty bearish. Today on the open, we got a rally back up, kissed that 38 Fibonacci, which traded around $36. I didn't get out quick enough, and the market slammed down on me. I thought we'd go up there and test it again. Didn't happen. So this is the candle I got out on. It started looking pretty bearish, like we start seeing those type of bearish patterns. The next one actually turned green right here. That was a green when I was like, oh, well, everybody else that's following these trades or playing this trade is probably going to get out a little bit better than me, but that bearish pattern came to fruition. But I got out for a scratch, basically, for all intents and purposes. And I did those also in the October monthlies that expire tomorrow, and sold the 134 puts. And the reason why I was getting, my commission plus everything else collection, I should say, and this Fibonacci that I thought would hold, it didn't. But having said that, I collected 79 cents for those, and I bought them back for 82 cents. So lost about a little bit better than a nickel, 7 cents on that trade. But happy to be out right now. It's probably not a winner anymore either. Not that it was a winner there. I could have gotten out for about 77 cents, I think was probably the best at the top of that move. That's being hindsight after I already got out of my trade. I bet I was keeping an eye on it anyway. So that being said, pretty good day for earnings. Like I said, I'm probably going to get out of that GDXJ trade by the end of the day. Hopefully here pretty soon as well. And that's about it. Today's webinar, though, is going to be on a bearish directional assumption on a long-term basis. Now, the beauty in this trade is kind of when we come out with something like IBM, we see this bearishness. Although they did beat on earnings, the market doesn't love the fact that they are getting into cloud services and AI, which is a higher profit margin and lower hands-on, if you will. So I don't know why the market never really likes the fact that they come out and really talk that up, but it happens. This could be long-term bearish for something like IBM, and we will be able to take advantage of that type of situation with this strategy. So when you have these long-term bearish assumptions, these are great trades. Also, it sets us up for the next earnings. Don't necessarily want to set these up in an earnings cycle for a specific underlying, but once we get out of it with like something like IBM and we have a longer bearish assumption, going forward, it is a great trade to set up for those next earnings. All right. So that's all I've got for you. Other than if you can't take that, take it easy.